Ladies and gentlemen, the markets are in absolute euphoria right now. Take a look at the euphoria meter, which is a combination of forward price to earnings ratio, the volatility index, and bullish sentiment. Compare the S&P 500 on a logarithmic scale in black to the red euphoria meter there. You can see that the components are the equivalent for incredibly high bullish sentiment right now. Unfortunately, markets say that after elections, the S&P 500 usually does very well. But it appears that this time is different. And I'll show you guys exactly why. Look at heavily shorted equities such as silver. Right now, 5 U.S. banks are facing billions of dollars in losses as the silver price spike hits short sellers extremely hard. There is a sharp recovery of gold and silver right now. And depending on the current sizes of their short positions, bullion banks could face nearly $200 million in losses for every single dollar increase in the price of silver. The short position in silver is 590 million paper ounces, and they cannot cover their positions with physical silver because there's insufficient amount of physical silver to meet the demand for paper. The price is obviously already over $30, and the Fed is about to cut interest rates again. The silver squeeze is just getting started and is going to come in hot. There's a sharp recovery going on here. Aggressive U.S. banks' efforts to push prices down through short selling of gold and silver and increasing yields on bonds will prove itself as an exercise in futility. Long positions will be the ultimate winners. Silver shorts exceed 1 billion ounces. And I'll explain why that's important in contrast to Donald Trump versus Kamala Harris. And many of you may know that Kamala Harris did not win a primary election. She was appointed by elites instead of Joseph Biden. And well, let's just say that the elites are not going to like it very much when Donald Trump wins the election, barring the big steal. Right now, Bob Elliott here brings up a great point on the slowing earnings in growth for the Magnificent Seven stocks. Right now is an important transition point from where the Magnificent Seven was the primary driver of earnings growth, as you can see that in blue, to where the rest of the market is increasingly expected to drive earnings higher. You can see here on this tweet from the Kobesai letter that the S&P 500 historically performs better after the presidential election. In the last 8 election years, the S&P 500 rallied an average of 6.6% in the 6 months following an election. The election day, to be specific. By comparison, 6 months prior to election day, the index saw an average return of only 1.5%. In the last 2 elections, the S&P 500 posted 3.9% and 18.5% returns 6 months prior to the election day. And after the election, 6 months following the election day, they posted 12 and 24.4% gains. Meanwhile, over the last 6 months, the S&P 500 is up 14%, which is well above the historical average. So history suggests more gains are coming for stocks. However, the S&P 500 forward price to sales ratio hit 2.9x in October, which is the most ever on record. And just 2 years ago, when the bear market ended, the ratio was 2.0, excuse me. So valuations right now are historically elevated. And that shows us that this time is likely to be different. So if you look at total government spending and revenue as a percentage of GDP, let me move that over here for you guys so you can see it a little bit better. Look at total government spending as a percentage here of GDP. Patrick Smith brings up a great point, and he says, I could see a rational person seeing government spending at 2% of the entire GDP and thinking, whoa, that has to be slowed down and brought under control. But it's now no longer 2%. It is 23%. No rational person would consider that rescuable. Abolish this criminal cartel now. And you can see here from the chart, the only times that we saw this to be actually higher was in the 1940s, immediately following the Great Depression of the 20s and 30s, from 1929 to 1939. The difference being that now GDP, government spending and revenue as a percentage of the GDP, is at 23%, a number that has not been seen in nearly 100 years. The government spending is going to be cut drastically when Trump wins the election. And what that means is that currently you guys can see that due to the government spending and revenue as a percentage of the GDP, the federal government is propping up the GDP of the United States of America via the use of their money printer by sending billions and billions of dollars to other countries and spending billions and billions of dollars on socialist programs such as bringing illegal immigrants into this country, providing them with housing, providing them with cell phones, food, healthcare, and many, many other things, cash subsidies. They are artificially propping up the GDP of this country to make it appear as if we are not yet in a recession. But when, as you can see here, let me put it this way. Elon Musk ripped the federal government, said the Department of Government Efficiency will get them off your back and out of your pocketbook. America is going to reach heights that it has never seen before. But before that happens, we must see a massive reduction in irresponsible government spending. Biden and Harris will continue that ridiculous government spending, and that would roar stocks higher artificially because inflation will also roar higher. But here is a 1-minute clip of Elon Musk.
I mean, at the end of the day, you're being taxed. You're being taxed. All government spending is taxation. So whether it's direct taxation or all government spending, it's either becomes inflation or it's direct taxation.
Bingo.
Your money is being wasted, and the Department of Government Efficiency is going to fix that.
And we need it. We need it to happen, even though stocks will not like it.
We're going to get the government off your back and out of your pocketbook. And America's just not just going to be great. America is going to reach heights that it has never seen before. The future is going to be amazing. Now,
I got to give
you guys
this
are
video a
awesome.
like.
Honestly, this is like. Yeah. I mean, this is the kind of positive energy that America is all about.
Amen to that. But before we can recover and rip stocks and crypto higher, we have to do something about the incredible overspending problem. This is a beautiful post from Ryan Ellis. He says that CBO, which for those of you that don't know stands for the Congressional Budgetary Office, proves once again that we have an overspending problem, not an undertaxing problem. Revenue is historically 17% of GDP. It grows to 18.6%. Spending is historically 21% of GDP, and that spending has now grown to over 27% under Biden and Harris. All of the problem that we're currently seeing is spending, not some of it, all of it. It is extremely fiscally irresponsible for the United States government to do this. And by doing so, they are devaluing our dollar and increasing inflation. That is an invisible tax on all Americans and people around the world because the US dollar is the global reserve currency. So that must be stopped. However, we can't continue to let this occur here in our country because we literally can't afford it. We literally can't afford it, and that is the proper use of the word literally. This government is spending hundreds of billions of dollars more every month than it actually brings in tax revenue. This is unsustainable. And if that continues, stocks will continue to roar higher, but inflation will as well. You can see banks and central banks are flowing into a risk-off policy and moving money from the S&P into silver and gold. Meanwhile, sure, stocks continue to rip higher and make new all-time highs, correct, but silver and gold are also squeezing. About a year and a half ago, 2 years ago on this channel, we were telling you guys when silver was at $17 an ounce and gold was under $1,700 an ounce, that they were incredible buys. We are seeing the incredible short squeezes happening on them right now. Shorts on silver have lost $5 billion in the last few weeks alone. $5 billion. And that's got us already to $34 and change on silver. That is almost an increase of 100% in the last year and a half. Gold, another heavily shorted equity, is also achieving all-time highs. Silver's not achieving all-time highs, but gold is achieving all-time highs. Silver's all-time high is somewhere in the $50 range, and we will, in the near-term future, get there, in my opinion. Gold as well at 2772, 2773 at this very moment is at all-time highs. Heavily shorted equities like AMC and GameStop lag behind the market. Currently, what we're seeing is a situation in which a lot of central banks continue to buy up more silver and gold. Meanwhile, only 1% of retail investors own any physical precious metals like silver and gold. That's why we are extremely bullish on this channel of people actually owning coins, bars, whatever you can afford to get your hands on, because this is the true hedge against inflation. This is it. This is a true hedge against the devaluation of the US dollar. Aside from that, there's private equity. Right now, we are working on a new stock brokerage firm and crypto brokerage firm, up and coming, called Lit Exchange. And our mission is to enhance fairness, transparency, and opportunities in financial markets for the 99%. This is the first time ever in history, the history of the world, in which an upcoming stock and crypto brokerage gives retail investors the opportunity to actually own equity in the company before venture capital firms or before hedge funds. Other companies like Robinhood, Webull, etc., have all gone strictly and directly to hedge funds in order to receive money. We are giving you, the retail investor, the opportunity, and we are 85% of our way to our $500,000 goal. So if you'd like to, go to litexchange.com. You can get a link there to our SEC Edgar filings. You can get a link there directly to our FINRA-approved funding portal at Silicon Prairie, in which we are offering this raise. All of the other documentation is there, such as the pitch deck, the business plan, the independent auditor's report, other memorandums, the subscription, etc., and all the perks and benefits. Now, the important thing here is that silver and gold are not alone. Silver and gold usually run with the S&P 500. When it goes up, they go up. When it comes down, they come down. And then in the recession that follows, which we saw this in 2000 and in 2008, in the recession that follows a market correction, which will likely occur due to the decrease in government spending by Elon Musk and Donald Trump, silver and gold do historically take off much sooner than the S&P 500. Meanwhile, if you guys look at what happened with AMC and GameStop, for example, in 2021, you will see that it is very similar to what we saw with Volkswagen in 2008. On September, right around the middle of September of 2008, we saw one of the worst days in stock market history on the S&P 500, losing over 13%. And almost exactly 30 days later, we saw Volkswagen squeeze to $1,000 a share. as hedge funds had to come into an agreement between Porsche, who was the majority holder of 55% of Volkswagen shares, the short hedge funds, and the federal government of Italy, who all came together to agree to a price settlement of $1,000 a share. The difference is that heavily shorted equities like AMC and GameStop are not held by one company. Over 90% of all shares of AMC stock are held by retail investors. Something similar can also be said for GameStop. A shitload of GameStop shares are DRS'd by retail investors, meaning that even though there is a possibility that they may illegally be able to be borrowed through the DTCC, even though some people claim they cannot, the fact remains that shorts cannot use them to close or cover their positions for an extended period of time. That being said, in the same way that Volkswagen squeezed in 2008, or dry ships squeezed in the past after some serious market issues in after 08 and 2010 and even 2016, we've already seen GameStop, AMC, multiple other stocks increase over 1,000, 1,500%, 1,800%, not once, not twice, but on 3 or more occasions. Now we have the same thing happening with DJT stock and many others. And with the inclusion of Robert F. Kennedy Jr. here, Elon Musk, working together to make America healthy again, working together to decrease government spending and revenue as a percentage of our GDP, it will absolutely make it evident to financial markets and the average American and the average person around the world that we are in fact in a global recession. That will undoubtedly be seen poorly by financial markets, stocks, crypto, and maybe not quite as drastically, but also bonds. The bond market is also rip-roaring higher right now, even though, well, let's put it this way. Bond yields are rip-roaring higher right now, which is not good for the bond market if you're in long bonds. Let's put it that way. Because after the Fed cut rates, instead of coming down, the rest of the bond rates went up. For the 10-year yield, especially, 30-year mortgages are now over 7%, the highest that they've been since 2022, because the markets do not believe that the Fed made the right decision by cutting rates. They do not believe that they will be able to make money on these 30-year mortgages by decreasing rates along with the federal fund rate. That bodes very well for our economy. That bodes very poorly for our economy, as well as bond investors. So, ladies and gentlemen, I need you to keep in mind that there are very many hedges out there. There are a lot of different hedges out there. Heavily shorted equities, tangible assets that cannot have their short positions closed or covered easily. And that includes silver, gold, DJT, AMC, GameStop, and a plethora of other meme stocks that are not majority owned by hedge funds. So I will leave this video short and sweet. If you guys don't know what I'm talking about, I recommend you go look into the short interest on these stocks, particularly the hidden short interest in the form of swaps, derivatives contracts, ISDA contracts, married and divorced calls and puts, shorts marked as long, and what happened with Archegos and Credit Suisse, and the fact that they are now bankrupt due to the vast amount of leverage that Archegos took against GameStop and AMC. Those swaps collapsed Archegos. Moving up the chain, they collapsed their prime brokerage, Credit Suisse. And now that prime brokerage is owned by UBS, as the Swiss government forced them to take over Credit Suisse. Now, UBS is in a world of trouble and faces increased scrutiny from the Swiss government and the central banks because they understand that their swap positions are massively over-leveraged due to the outstanding legacy costs of having taken over Credit Suisse from having taken over Archegos positions. Cheers, my friends. There's a reason that I wear this hat for over 3 years, because I don't care if it takes an extended period of time. There are multiple hedges out there that will make money at a variety of different times. Silver and gold will occur first, and we are nowhere near the top, in my opinion, of silver or gold. And AMC and GameStop may have some time to go, but they have massive, massive potential, even more so than silver and gold in the short to mid term, because of the fact that they are in majority owned by retail investors, whereas 99%, only 1% of people in the world actually own any of this precious metal, silver and gold. So go ahead and take a look at Lit Exchange, where you can invest in the private equity markets here. And then when we IPO, eventually when we IPO on the New York Stock Exchange or the NASDAQ, wherever we decide to publicly IPO, you will then also have first buyer's rights of additional shares pre-IPO. And you could, on both of your existing and your future purchases, could own a larger portion of the company and make significant profits. Cheers, my friends. I wish you peace and wealth. Have a great day. We're going to be filthy fucking rich.